Good morning, everyone, and thank you for joining us. We are here with Penn Mutual to discuss how to partner with CPAs and increase your revenue. Keith is with us, Keith Bumgarden, and he's going to be discussing today's webinar. After the webinar, we will be in touch with you, and if you have any questions, feel free to call into Provada. The number here is 415-369-9990, and we will be doing a bit of a Q&A afterwards, so please mute your phones right now, *6, and unmute at the end of the webinar if you have any questions. So Keith, whenever you're ready.
Thank you very much, Nikhil, and good morning. Thank you for the opportunity to share another story that we offer through Penn Mutual. If you recall, last time, our last webinar focused on retirement plans for small businesses. What I'd like to do today is just give you an overview of how to engage with CPAs, enrolled agents, and tax advisors. And after about 34 years in the business, I believe I found the best business model to engage CPAs with. And since they say timing is everything, we have 4 days before the 2010 tax season is over, April 18th, for individuals. So this business model really focuses on engaging and forming a strategic alliance. We've all tried with varied success to work with the CPA. So today I want to just kind of give you an overview of what our program is, how it works, why it works, and how it differentiates between some of the other business models that we've all seen. And again, in 1 hour, our intent is not to make you an expert, but all of us have worked with CPAs, might already have relationships with the CPA, and it is all about relationships and adding value. It's not about product and selling. So with that, let's start the journey. And again, we will hopefully have questions at the end. Nikhil can provide you contact information on myself, Penn Mutual. And I also want to introduce an individual that some of you have heard about, maybe even have met. Kevin Lord is our Regional Marketing Director for this relationship with Provada, and we are both excited about the opportunities. So in a nutshell, what we're going to try to do is, this is an agenda that you're looking at. The CPA world has changed, just like the financial service industry has changed. CPAs have entered our financial service industry in a big way. I will share statistics with you later on. This is an actual presentation that I use when I meet with CPAs, when I do continuing education seminars for their societies or their individual firms, and that's a service we can talk about on an individual basis as well. But today I just want to, again, you need to think like a CPA, and I have about 15 CPA relationships in Southern California. I've been doing this for about 30 years. This model, even though it's endorsed and was developed by Penn Mutual, one of the things you'll see that it will never have a Penn Mutual logo or a Penn Mutual name on it. The program is called the Professional Advisors Alliance program. It was based on the AICPA and Vision 2011 and the Moss Adams study, which we'll talk about in a little bit. And we do have a separate independent website, www.professionaladvisorsalliance.com. A lot of information on that. And I'll also share with you some other third-party information. And I'll talk to you about some of the compliance issues, some of the things that CPAs are fearful in establishing relationships with financial advisors. There's no question, and we all know this, that the CPAs and accountants will be the preferred primary advisors for their clients. The question is, how do they do that? Because they're not marketing people. Most CPAs, even though they have reinvented themselves, are number crunchers, and their job is tax law. So this whole program is a business model that is designed to do two things: add value-added services to new and existing clients, and secondly, increase their non-accounting revenue. The AICPA, which is the American Institute of CPAs, have already reported that most of their members have entered the financial service industry, whether they're licensed, whether they have established a strategic alliance with an advisor. They have reinvented themselves, and I think it's important to understand why they had to do that. If you were to ask your own CPA how their accounting revenue has, or if they have a marketing plan to take care of some of the decreases in their accounting revenue, they would usually answer, my accounting revenue is down, people are not paying their bills 30 days net, they're paying it 60 or 90 days net, and I need cash flow and I need a marketing plan that will help me make up for the loss of accounting revenue. Enter the PAA program. In fact, just to give you some statistics, and this was a survey done by a CPA magazine. In 2008, 18 CPAs had over $1 billion of assets under management. 93 CPAs had over 100 million. In fact, in 2011, both of those figures have doubled just in a 2-year period of time. So if you think CPAs are not in the financial service industry, I would suggest that you're wrong, and our role is to make you form a strategic alliance and show you how a strategic alliance through your own CPA would work to provide and take you to the next level business-wise. More statistics. There's no question CPAs are here to stay in the financial service industries. 47 of 50 states allow CPAs to accept commissions. And again, I want to stress they do not have to be licensed. That's one path that we'll go down. We have other ways to show them how to increase their non-accounting revenue rather than being product-driven. So as we go through this process and the model, it is not a requirement that they be compensated through commissions. That's a discussion topic, but there are other ways to increase their non-accounting revenue through payroll services, credit card processing services, through pension reviews, estate planning reviews, etc. And CPAs are good test takers. They already have, professional designations. The AICPA has a PFS, Personal Financial Specialist designation, and they've created a separate division on the AICPA website that if you haven't checked it out, it's a good resource center. It's called the Educational Center for Financial Services. In a later slide, I will share with you some of the materials on that website. But the main website is www.aicpa.org. It's unsecured. Take a look at it because it does have good information. And it's just like any other market. You need to think and know your client. So this is the CPA Society website. Some of the reasons why, that I think CPAs will be the best positioned and most trusted advisor is they're in a position of, people trust them. In fact, some of the KLRT survey is knowledge, likability, respect, and trust. They know taxes. They're good with numbers. What they need is a relationship with an advisor like the people listening in through a strategic alliance. And that's what our program does. Their clients are very comfortable with the CPA, but the CPA needs to be in a position to be a one-stop shopping center, and they want to retain their clients because their clients, based on a survey that the AICPA did, said that they would do business with CPAs on investments or non-traditional accounting services. In fact, 13 to 17% of their clients said they would buy financial services from somebody. So the question is, why shouldn't it be the CPA? The CPA's clients simply don't know the services that the CPA could offer through you as an investment advisor, and that's the key behind the PAA program. If you're interested in a great book that discusses how CPAs think, the best one I've seen is The Trusted Advisor by David Meister. You can go to Google or any bookstore will have it. And again, you need to understand how CPAs think, and this is one of the better books that I've seen on that subject. The best equation to success in working with CPAs is the one that's shown on this slide. And one of the reasons why CPAs are fearful about establishing relationships with advisors is also due to this formula. You know, the players in the game have to be trustworthy. And trustworthy is credibility. And all that's saying is, can the CPA or their clients believe what advisors say? Reliability. You know, do they follow through with their actions, or are they just transactional? Intimacy. You know, how do they deal with their clients? All right. So the question is, what you do, how you do it, and the follow-up to it. And the biggest fear that CPAs have, and the reasons why a lot of the referral methods and the other business models are flawed, is CPAs fear the motives of most advisors. If your motive is simply product and commissions, the CPA and this relationship won't work. But if your motive is relationships and value-added services, that's the key. So up front, we talk about, you know, part of our formula is the CPA trust equation. So it's important to recognize that. And the CPA clients, this is what they want from an advisor, whether it's a CPA through a strategic alliance. They want independent and objective advice. They want a range of products and services. They want responsive service. They want a long-term relationship. They want, you know, comprehensive advice. They just don't want one product. Doesn't that sound like how our world in the financial service has changed from being, you know, rate book oriented to financial planning and offering, here's a fact finder, let's do a financial plan and let's offer solutions? That's the same type of formula that CPAs and their clients want. That's why our role as an advisor and a trainer with this program is to make sure that the CPA understands that this is a business model. It's designed to enhance relationships, increase relationships with new clients, and add value-added services, and also increase non-accounting revenue, which I'll share with you later on. And Kevin, if you're still awake, this is exciting. I mentioned earlier that CPAs have changed from simply being viewed as a CPA to more of a wealth manager, and they have gone through a stage of traditional CPAs perceived as just the tax preparer to financial advisors, and a lot of them have actually entered into the third stage as a wealth manager. And there's some issues, some concerns, and challenges with that we'll share with you in a little bit. Again, one of the resources that you should be aware of is the AICPA website. The AICPA website has a Vision 2011 mission statement, and basically it says that CPAs need to think outside the box. Their world has changed, and in order for them to survive and add value-added services, they need to change how they're perceived. And what that's really saying is they need to develop a marketing plan. And again, ask your own CPA or your tax advisor the next time you see him or her, do you have a written marketing plan? And the answer in most cases would be no. We provide that written marketing plan as part of the PA program, and I can share with you the fact finder that we use, a sample marketing plan, and we have a lot of information. So this is a truly business model, and it does take a lot of time to develop.